Support comes from Pacific Science Center, now showing Spiders from Fear to Fascination. This limited-time exhibit explores the science behind spiders through interactive games, virtual spider encounters, and live specimens. Exhibit created by the Australian Museum. Ticket info at pacsci.org. Support comes from Mechanics Bank, a West Coast bank providing premium personal and business banking services for 120 years. They understand relationships matter and go the extra mile to help clients reach their financial goals. Stop by a branch or visit mechanicsbank.com today. Mechanics Bank, member FDIC.
You may have heard the economy is maybe, definitely, probably in an AI bubble.
You think there's a bubble happening in the U.S. market?
We're certainly seeing lots of evidence of bubble-like behavior.
Investors have been pouring money into companies linked to AI.
I don't believe we're in an AI bubble.
Companies are spending hundreds of billions of dollars to build the AI infrastructure of the future. The hope is that all that spending will pay off with super advanced AI that will more than cover the costs of building it. But that payoff isn't coming, at least not yet. Companies are struggling to make a profit on the AI of today. So is that future real or just a mirage?
30% of the entire U.S. stock market is in 7 companies.
Right now, the biggest companies are all buying and investing in each other.
We are taking a forward bet that it's going to continue to grow.
The AI bubble is a bubble, and it will pop.
I'm Monica Nicholsberg, and this is Booming. Today, what happens to Seattle's economy if the AI bubble bursts? That's coming up.
Support comes from Pacific Science Center. PacSci works to remove barriers to STEM education on campus and in the community through outreach programs like Science on Wheels, digital discovery workshops, and camps for curious minds. More information on ways to help at pacsci.org. Support comes from Mechanics Bank, a West Coast bank providing premium personal and business banking services for 120 years. They understand relationships matter and go the extra mile to help clients reach their financial goals. Stop by a branch or visit mechanicsbank.com today. Mechanics Bank, member FDIC.
Did you think it was strange when the tech bubble burst in 2001 and the housing market in San Jose, the tech capital of the world, went up? That's strange.
No, it's housing. Housing is always stable.
In the AI gold rush, the world's biggest companies are playing an expensive and risky game. They're trading computing power, chips, and services back and forth in multi-billion-dollar deals that make it hard to tell how stable the AI economy really is. Investments are circling between the same few companies, and as many of those same companies struggle to come up with the promised profits from AI, a lot of people are concerned that the reality just doesn't warrant the spending. So what is a bubble exactly? A bubble in the economy happens when the excitement around something, like AI, for example, starts to drive prices higher than a product's actually worth. When the products don't actually deliver on that hype down the line, or when everyday people don't buy in, then pop, there goes the bubble. Layoffs and bankruptcies usually follow suit, and so can a crash in your retirement account. The consensus lately is that our economy is in the middle of an AI bubble right now. But Tim Porter disagrees.
I feel like the definition here relative to AI is being stretched from that traditional definition.
Tim is the managing director at Madrona, a local Seattle venture capital firm. I sat down with him to talk about what an AI bubble, or a lack of one, means for Seattle. Thanks for joining me today, Tim.
Great to be here, Monica. Thanks for having me.
So, Tim, it seems like every day I see another headline claiming we're in an AI bubble. So to start, are we in an AI bubble now?
My short answer is I don't think we are. I think there are definitely things to be concerned about in the overall market. There's a lot to be really excited about in the overall market that we can talk about. There's really a big concentration issue right now in this overall rally around AI. There's a small number of stocks and companies driving a ton of the overall increase in value in the market. If you look at those companies, they're not arguably that overvalued. These are some of the most amazing businesses in the history of the world in terms of the amount of cash that they're generating, how profitable they are. They're not highly leveraged, using a lot of debt. These companies, often referred to as the Mag 7, the Magnificent Seven, NVIDIA, Apple, Microsoft, Google, Amazon, Meta, these are driving a lot of what's happening in the public market. And I wouldn't say that we're in a bubble.
Okay, so I know that you're a believer in AI and that it will deliver on all of its promises. But let's just engage with the argument that there is a bubble for a second.
Yes.
For those who believe that there is one, they're bracing for this inevitable pop. And that pop obviously wouldn't drive big players out of business. Like Amazon and Microsoft are not going anywhere. But it could impact smaller companies,
yes,
startups. What are the risks for the tech industry here in Seattle if these investments in AI don't pan out?
Yes. And I will say to your point, and let's engage in why you could argue there is a bubble in some of those headlines. So there's this concentration issue where there's these 6 or so companies that are driving a lot of this. The other huge one is OpenAI. They're the biggest private company, biggest startup, the world has ever seen, currently valued at, $500 billion as a private company.
Just wild.
So besides concentration, there's also circularity. You hear this referenced a lot. OpenAI is saying they're going to build all these data centers. They're putting in all these orders. And that's driving NVIDIA chip orders. Amazon, Microsoft, and Google are building data centers to drive the OpenAI demand. That circularity is reminiscent of the dot-com era where companies are swapping, money back and forth and they're not real transactions. A counter to that is there is massive demand. As fast as these data centers and chips come online, they're getting used. So it's not like there's way outpacing what there's actually demand for. To your point then about startups and about Seattle, I think there is a stronger argument we're in more of a bubble in the private market world. There's a lot of venture capital and other private investment dollars chasing AI companies. There's a lot of AI companies getting created. In the last quarter, 71% of all venture capital dollars went into companies that were building AI or were sort of explicitly AI companies. And I think they're the part that has the attributes of a bubble is that there are too many companies getting funded, and they're not all going to make it. Some are going to make it really big. They're not going to all be the one. So I think there will be a down come in the market over some period of time where some of these companies can't raise future funding, et cetera. What we're seeing is a lot more opportunity in startups than downside. We have about 140 portfolio companies. About 2/3 of them are in the Seattle area. These companies are net hiring. They are not net laying off. So if you had some blip where enterprises, consumers lost faith in AI, they didn't think it was delivering, could that trickle all the way down and see some of these startups go out of business because of that? Yes. Are you going to see some of these startups go out of business because there were just too many that got funded and too many going after the prize? Yes. Are you going to see some of them, grow more quickly and turn into huge iconic companies? I think yes.
I want to come back to what you're seeing with the startups that you invest in because you've got such a close view of that. But first, I just want to stop down for a minute on the circular dealing that you mentioned. Because you talked about demand. There's lots of demand for chips. There's lots of demand for computing power. But it's a little bit hard for me to get my head around where the demand really is and whether it is in line with the amount of building that's happening. Because when we say demand, we're talking about demand from one company to another, demand for data centers, demand for chips. Why do you think the consumer side of this industry is lagging behind? And what will it take for it to catch on, for AI to deliver on its promise to make all of these businesses rich and to get every single person in the world using it and paying for a subscription or whatever it might be?
I think it's helpful just for a second to think about sort of the different layers in providing these AI services. And it's really chips, infrastructure providers, model providers, and then applications. And so chips, this is NVIDIA. There's a set of other chip providers, and they're building a lot of these GPUs that are powering these data centers. Google, Microsoft, Amazon are the biggest ones, but Meta's building their own. Oracle's building them. And so they run models. That's what OpenAI's core business is. ChatGPT, that's the most famous model. There's Anthropic, but there's also a growing number of model creators and providers in open source that are specific to certain industries. So that's proliferating. And then there's applications, and there's millions of applications that are getting built. And the fact that there's all of this building and all these chips and all these data centers driving down those costs, it's amazing if you're an application provider. You want to surf off those models that keep getting better and the costs that keep going down. So where is the demand coming from? From companies, using AI to write code faster, or using it to provide customer support so that when you call and instead of that old press 1, press 2, maybe you're talking to an AI agent that can help you more effectively, to industries like legal, helping with sales and marketing. So there's lots of enterprise use cases, but there still is a really big consumer piece. I mean, OpenAI, ChatGPT is mostly a consumer product. And there's, the whole ChatGPT replacing Google search, or Google's doing really well here too with their Gemini model. How often now you go to type something into Google, do you look at the Gemini summary versus the 10 blue links? So I think while there maybe is not this huge number of use cases that immediately come to mind on the consumer side, there is a big part of the business around core search. OpenAI is now going into browsers, it's going into shopping, creating music, creating images, creating, videos, dating applications. I mean, I would push back somewhat that there's not a big consumer piece of this, even though on the enterprise side, it's easy to let your mind quickly run to all the different businesses and use cases that are getting built.
Yeah, and I take that point. We're all using it to some degree, but I think where some of the skittishness is happening is, yes, many companies, many enterprises are finding ways to adopt AI, or at least really want to, but what's less clear is whether that's gaining them productivity or extra profit at this point.
Totally fair. I think the jury's still out in a lot of places. I mean, take this case of writing code faster, right? This is maybe the use case that's taken off the fastest, and there have been a set of companies created. This company called Cursor, that was one of the fastest to $500 million in revenue. It helps you write code, with AI. And then businesses are finding out, yes, that saves a ton of productivity. My developers don't have to waste a bunch of time, writing the same thing over and over again. But just because now I have a lot more code faster, it might take me more time to test it. It might take me more time to review it. I might need different skills from my developers. And really the only thing that matters is how long does it take to create a good product for my customer, so those kind of things are getting figured out for sure. But I also think that there are areas where you are seeing strong ROI. The customer support angle is a huge one. Healthcare, let's say in the back office where you have people that provide your healthcare trying to get paid by insurance companies and all the back and forth that we sort of all, are aware of in our personal lives. There's not enough people to do all of it. So I do think it's early days. I do take the point. And maybe this is where, I'm an optimist on this and seeing that when AI is used well and it's applied to a real problem, usually an existing workflow, an existing thing that humans are trying to get done in their business, you can do it faster, better, cheaper, and provide an ROI. And I think that's just we're going to continue to see that wave over coming years.
The dot-com bubble is often compared to the moment we're in right now. Were you here in Seattle when that bubble burst?
I was. Yeah, I working for a startup. In fact, I moved to Seattle in 94. I joined a startup in 96 that was in the telecom space. It was building satellites. It was called Teledesic. People might be familiar with Starlink now from SpaceX. Teledesic was basically trying to build Starlink just 30 years ago or 25 years ago. And we went out of business, when the bubble burst. So I was definitely here and definitely lived through it.
I wonder if you could take us back to that time when companies like yours were going out of business. What was the broader impact on the Seattle economy then?
So for me, I was like, hey, this is a great time to go to grad school. So I went to business school for 2 years. But then even when I came back in 2003, I joined Microsoft, and I was really interested in continuing to be in tech, and there just weren't a lot of tech jobs. And so there weren't a lot of startup jobs. Microsoft was one of the few that were hiring. There was a system where you had to bid your points to get interviews for the places you want. I had to bid all my points to get even on Microsoft's interview schedule. And then just a few years later, when I was working at Microsoft, there were so many tech jobs that I was hard to even recruit people. So it can change really quickly. I think another thing that has been in the news here recently is the benefit of bubbles. In that even if you take something like during the internet bubble and the telecom bubble in 99, 2000, 2001, all of this internet fiber optic cable was getting laid, and it didn't end up getting used. But that all has eventually gotten used. And so the fact that investment happened, at that point in time, while it was tough for those businesses when all the spending stopped, it ultimately was a good thing for the economy. I think you could see some of those things right now. And I'm not just trying to rationalize everything is good here because this is the world that I'm working in. But I mean, if we're going to really deliver on this AI wave, we're going to have to be able to produce a lot more clean energy. We're going to have to be able to have access to a lot more clean water and be able to recycle that. So those create stresses, but it also creates impetus to innovate. And I think that not only the AI itself is going to allow use cases and applications that we haven't even dreamed of yet. I think there's other good things that this is pushing us forward to have to solve.
You mentioned some of the mind-boggling valuations that companies developing AI systems have right now. I mean, some of them are more than the GDP of some countries. How is that trickling down to the local startups that you invest in? How do you judge which companies are worth investing in and which ones are just sort of riding the hype train?
Yeah, such a good question. I mean, this we spend every week debating. I would also say that just philosophically, we try at Madrona to avoid this trap of just looking, hey, this could be the next NVIDIA or this could be the next OpenAI, and instead look for companies where you have, a founding team that's incredibly empathetic for the customer problem they're solving. They understand the domain. We talk about moats frequently. What's the moat of this business that's going to, prevent a competitor from coming in? And then a big piece is looking for companies that just execute really quickly, that understand how to take advantage of all these really rapid technological advances. I've been in venture now for 20 years and in tech for 25, almost 30. I've never seen things changing this quickly. The next month something new comes out. People can see it in their personal lives a bit, even how ChatGPT got so much better, over a relatively short period of time. And so we look for teams that can really be nimble, and take advantage of these technological advances to solve some problem for customers. But, it's hard and nothing's certain, but we do try to find founders who want to go change the world in some meaningful way.
Even if these big companies can weather a bubble bursting, a lot of us have our retirement accounts tied up in their stocks. I mean, the economy is being propped up by these companies right now. What can ordinary people who are feeling worried about the possibility of a bubble bursting do? Because ultimately, they're going to be the ones who are hit harder than Microsoft.
It's a great question. And I mean, I'm not a financial advisor or a stock picker, so everybody take it with a grain of salt. But like everyone else, I'm thinking about the same thing. So even you've heard me, I'm very bullish on this, and it's still concerning. Just a few stats to your point. So the combined market cap of the Mag 7 is $22 trillion. The combined market cap of the S&P 500 is $58 trillion. So 38% of the S&P 500 is those 7 companies. And most people with any sort of, retirement savings, you're putting it into, S&P 500 index funds, et cetera. These companies are about the size of the UK, which is one of the biggest, markets in the world. So to your question, what can you do? You can invest in, an evenly weighted S&P 500. So that's not 38% of your money in those 7 companies. It's even across those 7. You could think about, international. I think it's also arguably a dangerous thing to go bet against these companies. I think that betting on the opportunity of AI, the future and the possibility that's there, I think you want exposure in those areas, but it's always good to be smart and think about diversification and not necessarily get fooled that as you watch your investment portfolio go up, that it's everything. It is really, these 6 or 7 companies have driven an incredible part of that.
Well, Tim, you've made me very nervous. So let's rein it in. You're an optimist. So let's say we're not in a bubble. Mm-hmm. When we look to the future, what's the best case scenario for Seattle in 5-10 years, assuming these AI investments do pay off?
Yeah, I definitely would want people to not come away feeling more nervous than optimistic. And, Seattle has the highest concentration of technical talent of any city in the country. There's more engineers in the San Francisco Bay Area, but as a percentage of the overall market, it's an incredibly strong talent market here. And we have a lot of tech, but we're not only tech, right? There's lots of core industries that have been great pillars from, Nordstrom to Weyerhaeuser to Boeing to, you name it, that aren't all Microsoft and Amazon. Microsoft and Amazon are incredibly diversified businesses. Amazon has this little thing called e-commerce, in addition to, their AWS business, and Microsoft has this little thing called, Word and Excel
software,
and, software, et cetera. Plus now we have multiple generations of successful startups. So it's not just those big ones, but companies like Smartsheet or Redfin or Tableau Software or Expedia or Concur or Real Networks. They've been built. The people that work there are now off building new things. So I'm very optimistic about the tech economy in Seattle, and that we're in the early innings of this AI wave, and it's going to create, massive amounts of opportunity. It's going to create some changes as well, too, in how we work. I think, individually, or what I tell my son who's in college now is, lean into, AI in every way you can to make yourself more efficient. But don't lose sight of the people that are going to be successful, are able to maintain their creativity, critical thinking, and then use AI as a tool, to be efficient. And then last, I'll say there needs to be nearly as much innovation in how do you make AI safe as there is in how do you make AI more capable. And I'm really encouraged, like the Allen School at University of Washington, Allen School of Computer Science, they just announced these 6 grand challenges that they have, most of them around AI, and 2 of them, in fact, one is around transparency and reliability, and the other is around safety and security. And so I, want to be optimistic about the opportunities to innovate in that area as well, and so that we can use these tools in reliable, safe ways.
And we will be reporting on them. Tim Porter is managing director at Madrona, a local venture capital firm here in Seattle. Thanks for the conversation today.
Thanks so much. This was really fun.
That's it for Booming. Thanks so much for listening. If you have a question about the economy that you want us to answer, email us at booming@kuow.org. Or you can leave us a voicemail at 206-221-7158. Also, thanks to those of you who are donating to Booming. We couldn't make this show without you. If you want to donate, go to kuow.org/booming. And thanks. Our producers are Lucy Suchek and Alec Cowan. Our editor is Carol Smith. Booming is hosted by Joshua McNichols and me, Monica Nicholsberg. We'll see you next time.